brand new Business and Markets Week starts right now here in Nigeria. Welcome everyone to your Business Morning this Monday, the 8th of April. I am Bosin Mofaye. Let's get the show started. It's about lunchtime right now in Dubai, where Nigeria is showcasing the country's investment opportunities as President Buhari delivers a keynote speech at the annual investment meeting in the UAE, which is focused on mapping the future of foreign direct investment. President Buhari is giving that keynote speech. And of course, if you're already on social media, you'd have seen some early images of that investment in Nigeria's investment opportunities. The NIPC and a few government agencies are already on the ground to showcase investment opportunities within the country in tourism, mining, and other areas. So that's the big story today. The president is speaking in Dubai on that very important Middle East conference. Let's keep that in our news box for today. Meantime, back at home, the president ordered the immediate closure of all licensed and artisanal gold mining operations in Zamfara State because of the unending cycle of attacks and retaliatory attacks that has left scores of people dead. The president says all foreigners doing both licensed and artisanal mining of gold in Zamfara State should leave with immediate effect. This week, the world will welcome U.S. President Donald Trump's nominee, David Malpass, as the new World Bank president. Malpass will be unveiled at the spring meetings of the World Bank and International Monetary Fund, which formally opens tomorrow, Tuesday, the 9th, in Washington. The meeting is focused on a number of areas, but the schedule will have a few new areas. The World Bank IMF meeting will have a new World Uncertainty Index. What does it mean? From Mystery Index, the world is now uncertain. So there's a new index which will be unveiled during the week. It's called World Uncertainty Index. You need to focus on this. It's an uncertain world where which we live right now. Meantime, it's been 75 years since the Bretton Woods institutions, both the World Bank and the IMF, were set up at the end of the World War II. So, what has been the journey so far in global cooperation and integration? That would also be in focus. But we have quite a few of the meetings focused on Africa, building human capital on the African continent, as well as our digital economy, which is making a big headline, as well as the state of the African region. All of that we have in our package for you as this week progresses. Meantime, crude oil prices hit a fresh high today as clashes in Libya and North Africa as to the global supply concerns. Nigeria's oil benchmark, the Brent crude, seen early today at $70.60 per barrel. And last week, Friday, back to the marketplace where we're stepping into the central bank, opened this standby lending facility, what we call the SLF, to financial institutions. Of course, that added to the system liquidity that includes the inflows from the FAC payments for the month of March. So that takes you to the currencies market, where the Naira advanced about 0.1% at the investors and exporters window, but was flat on the US dollar at the street level. Total R&E turnover moderated 9.9% last week to $1.09 billion. That is total inflows last week via the R&E window, $1.09 billion. All FX futures contracts appreciated against the dollar. Look at the table down there. You find the numbers. 1 month, a futures contracts for the dollar up 0.16%. Naira was also at the same margin, higher than the dollar at a 3 months FX contracts window. For 6 months FX futures, that was better for the Naira, 0.31%, while 1 year FX futures contracts was also good for the local currency unit by 0.64%. But that was sweet as far as the currencies market was concerned. It was not so good at the on Broad Street, where the stock market and the unlisted securities market, where we lost nearly 5% at the stock exchange, and at the NESD OTC, we lost about 3.23%, quite a negative landing for the first full week in the month of April. Bring in Temple Ashaju for us from our studios at the Nigerian Stock Exchange in downtown Lagos, where Temple is always keeping a vigil and one permanent eye on the markets. I say, so Temple, good morning. It's good to see you. This was not a very, trying to recap last week, not a very fantastic week, as it were, both at the quoted and listed securities and the unlisted securities market. Take it from here, Temple. Where?
Yeah. Right, both and good morning. Thanks for this opportunity. So the market, and the stock market specifically, that's the equity side of the market now, we lost over 548 billion naira in total last week for the 5 trading session. And of course, that represents a 4.59% decline in the key benchmark indices, and of course, the equity capitalization, which now settles at 11.124 trillion naira. Now, if we go to the activity level, in terms of the activity level, we have a serious increase in the level of activity for this last week compared to the preceding week. For last week, we had some 3.544 billion ordinary units of shares traded compared to some 2.62 billion ordinary, volume of shares that we had in the preceding week. And of course, for the value of the transactions was 20.264 billion naira last week. But for the preceding session, or preceding week, it was 12.7 billion naira. And if you look at the deals side of it as well, it was 19,130 for last week alone, compared to 15,558 in the preceding week. So it tells you that last week there was a huge sell-off in the market, contrary to the projections of a lot of analysts, where we had expected that we would begin to see a bit more of a bargain hunting compared to the sell-offs. But apparently, there's no news in the market. There is no catalyst to push up demands for shares in the market. So it looks like investors are beginning to sell down their stakes in equities to move further to the debt market, now that we know that the DMO has already made an announcement about some new issuances that will be coming on board for a 10-year and a 30-year paper. So this lackluster performance was basically driven by the bearish sentiments across all of the major sectors that we had in the market. Of course, the banking segment, due to some sell-offs on FBN Holdings, Access Bank, and UB, as well as Zenith Bank, we saw that sector closing down at 6.09% in terms of the performance. Consumer goods segment of the market, Nestle lost some 8.23%. Dangote Flour lost 16% last week. And of course, International Breweries, which is not in profit yet, was down about 10% to last week. So if you put all that together, it represented some 7.73% decline in the consumer goods segment of the market. Industrial goods segment of the market, going by what we saw, some 1.05% decline in Dangote Cement last week. That also contributed massively to the losses that we saw in the industrial goods segment of the market. The insurance segment of the market was down. Oil and gas was also down. But the cement sector of the market, and of course the personal care and the food sector of the market, were basically the major volume shockers for last week. In terms of the energy segment of the market, if you take a look at the numbers we have here, on Friday specifically, there was basically no change. There was basically no movement in share prices. Everything remained unchanged. Corn oil remained at 23 naira, 40 oil remained at 27 naira 40 kobo, while 11 PLC is 170 naira. MRS, O&O, surplus, all of that remained unchanged on Friday. This data here is for Friday. Total, Eternal PLC, all is the same. Let's move on to the unlisted securities market. The unlisted securities market for last week, it was down 3.23%. We got the USI settling at 733.24. And of course, the market capitalization reduced to 526.79 billion naira. But for that last week alone, we saw a volume of transaction at 1.09 billion. And of course, that's valued at some 839.05 million naira. Now, if you take a look at that, that's a 507% increase in terms of the value of transactions when you compare to the preceding week. And of course, the deals for last week alone was just 55 in number. We know that last week, Food Concept was a major performer in the market. A lot of investors put their money on ground for that particular company. So I think about 1.07 billion units of its shares were really traded last week. Quickly, we run through the bonds and the treasury bill side of the market. On a weekly basis, we know that the average bond yield expanded by some 14 basis points. We got that week-on-week movement settling at 14.25%. And of course, there was so much sell-off at the end of the curve, that at the long end of the curve rather. And the DMO, of course, as I said earlier, hinted about the Q2 bond calendar, some 300 billion naira worth of bonds are to be issued going forward for Q2. And I think that's some 23% lower than the actual compared to what we had before. Then, of course, there were two new issues. The two new issues are the April 2029 and, of course, April 2049 security, which is a 30-year paper. But for Friday specifically, 23rd of February 2028, saw a bit of sell-off on that as well. Investors gave cold shoulder to March 2025 security, and of course, a few securities experienced a bit of a demand there. But generally, at the secondary side of the market, deals yesterday on Friday was 54, and of course, it was valued at 12.49 billion naira. For the Treasury bills side of things, average yield also expanded some 31 basis points week on week to some 13.9%. We saw that being driven by the elevated liquidity in the system as the CBN resumed its OMO operations, trying to carry out also last week at the short end of the curve. We saw some 526 billion naira worth of OMO transactions on that side of the market. Of course, we saw some higher stop rates there, and that resulted in some 40 basis points week on week jump in yields, Bosun.
Tempo, very mixed and active week, as it were, for the fixed income, because that's where the big story is taking place. In particular, since we started the new year, the stock market hadn't really been in a stellar performance. We lost close to 6% now since the year started. So let's keep that a little bit to one side. But again, if you look at equities, earnings were coming through last week. A bit of this were a bit of a bittersweet. Medview earnings for full year 2018 was not flying at that altitude as the plane goes 30,000, 20,000 feet up there in the air. So the earnings was really down on the ground. So that was on one side. We have Axelman side. Then the Wando's debt story, which is about restructuring plans, seems to be getting investors' attention as we see investors buy a bit into this particular stock as the company announces sale of some assets, trying to do debt restructuring between now and June, get out of this debt burden, get Wando into what we call the blue ocean, and start paying dividend according to all those announcements. But again, let's throw this back at you at the stock exchange. I'm sure Adedayo from AfroInvest is joining you to have this very interesting conversation around some of these earnings. Which of them are bitter and which of them are sweet? If it's sweet, how sweet is it? And who else is still hanging out there to release their earnings for last year? I'm sure FBNH Holdings says we might not see any numbers from this financial services group until the end of April. So that keeps about 3 weeks or so hanging in there for this very big and important part of the market. Tempo, back to you.
Sure. Right, thanks, Bosun. So we've got Adedayo Bakare right here. Thanks a great deal for joining us. Adedayo Bakare is, of course, from AfroInvest, the major researcher there. So you've got interest in some banks and, of course, the downstream side of things and a couple of cement companies. Let's begin with the bank. Of interest to you, Sterling Bank and FCMB, what do you have?
Okay, so for what we've seen, year 2018 performance, we've seen that overall the banks saw impressive performances. So even from tier 1 names to tier 2 banks. So with the tier 2 banks, Sterling, for instance, you saw unconventional gross earnings expanded very well, and this was driven by both interest income and non-interest income. Funny enough, what we've seen across banks, even among tier 1 banks, the big names like Access, GTB, Zenith, is most of them didn't even really grow interest income last year due to a reduction in their loan portfolio. So most of them are not aggressively lending to businesses and to retail clients. But for Sterling, we saw a very good expansion in interest income, and most of this is also driven by a lot of investment in investment securities. So you have rather than deploy money to expand the loan book, banks are increasingly more cautious of the risk environment, even the generally challenging macro environment, and they are deploying a lot of assets into the investment securities, which is basically treasury bills and government securities. So for non-interest income, we see that due to the digital space, commissions, trading fees and all those things, we saw a very, very decent expansion in that as well, and that filtered into the profit after tax of sterling. It was a very good performance. They grew profit after tax by about 14% to 9 billion. Also, another positive we saw was generally, non-performing loans are trending downwards. This is due to, you've seen some form of recovery in the economy, and you see that banks have made the provisions they've made before. Some are writing back those provisions. The credit space environment is generally improving in line with, broad macroeconomic improvement. And that is why you see also in terms of credit impairment charges, we saw a moderation across, across board. This was also consistent with, FCMB numbers. You saw an expansion in non-interest income, very solid expansion. You saw, a moderation in terms of credit impairment charges as well, and that fitted into a very solid, profit after tax performance. So generally, the news has been positive for banks for their full year 2018 earnings, and things are pretty stable now. The only concern is in terms of the capital base of the banks, which is obviously strong, but they made some adjustments last year, the IFRS 9 requirements, and some took a hit in their capital balances, but overall they are stable and strong.
So with all of these, I'm wondering why a bank like Sterling Bank is actually not even proposing any dividend at this point. So FCMB on its own part is proposing about 14 kobo or thereabouts. Either flat or a bit lower than what they did in 2017. But for Sterling Bank, there's a clause or thereabout in their earnings, in their reports for this 2018 we are talking about, says there's no risk at all in the operations, and of course their in terms of their status, basically their balance. So if they are confident in that regard, how come there's no proposal to pay, no matter how little or flat it could be to investors for 2018?
Okay, for FCMB, they paid 14 kobo. That translated to around 7.1% yield, dividend yield for investors, which is good. For Sterling, a lot of things are happening in the banking space, and one of the things I alluded to earlier was the new adjustments they're having to make, which is affecting their capital balances. And for banks, there's a certain ratio you must maintain. And if you even want to be prudent when you make generate a lot of profit, you want to keep a lot. You also want to retain a lot of it. It makes no sense for you to pay out cash to investors and later on be looking for be looking out for cash later on, maybe by equity raising or debt raising, which will not be too good for investors. So this way, it's in a way to retain more capital to even grow the business further. They are just being cautious at the moment.
Let's talk a bit about the downstream segment. Owando is raising capital later in the year, but of course it's looking at quickly implementing its debt reduction strategy. Forte Oil has also posted some earnings following the exit of billionaire Femi Otedola, and of course it got Total. What more can you tell us?
Okay, so the downstream space has been constrained for a while. And we all know what is going on in the petroleum market. Prices have been fixed at 145 naira per litre since 2016. And since 2017, thereabouts, to 2018, we've seen that NNPC is now the major importer of petrol into the country. And this has, in a way, affected the businesses of downstream oil and gas companies. And basically, they have to rely on NNPC to, meet what the needs of the consumers in the retail space. But interestingly, what we've been seeing lately is that a lot of these firms have been creative, so they are trying to diversify their operations. Total, for instance, is going into renewables. Forte Oil, they still have the power business, which is generating a lot of money for them. But in terms of the retail business, we are not really seeing a fast-paced expansion in that regard. But in terms of the diversifying their operations, we'll be seeing pickup of activity, but that is still very, very low, relative to the overall business. So currently, the space is challenged. Players are looking for ways to boost revenues, but it's not working as fast as they intended to be. So for basically for MRS, Forte Oil, we saw a deterioration in their earnings performance.
In fact, they didn't really make any changes on Friday, basically. But quickly, this CNN, they're paying out 40 kobo.
So that's a bit surprising because CCNN is, they recently concluded a merger with Kalambina Cement, and basically you've seen a very good performance actually when you think in terms of revenues, expanded by more than 60%. This filtered into the bottom line. You saw an expansion of about 70%. So
maybe they're just one of the companies also trying to defer the benefits.
Yeah, absolutely. For us, we don't really think they needed to have paid, because basically what they are doing is they are basically paying out almost all the profits, and they do not even have enough cash to pay it, which means so they're going to borrow to pay it. So we do not see any substantial reason for that.
Well, that means all the best to CCNN anyways, and whatever they do in 2019. You're hanging with us here. You're still very much around. Bosun, we are done with Adedaya Bakari for the first segment. I think it's over to you now to launch us into the break.
Yes, again, what we want to do after the break, Temple, thank you so much, is to put some macroeconomic stories behind those numbers for the companies and for the broader economy. Taking all of that from FSDH Research Group. When we come back after the break, stand by everyone. We're back in 2 minutes.